Hi, and welcome again to another edition of Market Analysis for today, May 13th, 2024. I'm Giovanni Benacourt, analyst, trader, and educator with Vantage Markets, and this is being pre-recorded to the US Session Open. Well, another week, another attempt at analyzing and reading the markets. Traders are still in the dark about when the Federal Reserve might start cutting interest rates. Even two new inflation data points this week may not provide much more clarity. The producer price index is out tomorrow and the consumer price index on Wednesday. The CPI in particular has been sticky this year. A large part of that comes down to housing costs, which haven't slowed as much as the Fed might have hoped. But it could also be a statistical noise, and housing counts for a lot less in the Fed's preferred inflation gauge. The personal consumption expenditures index, also of note, is that labor market data have been heavily revised this year, making them a bit harder to decipher. And Morgan Stanley has identified another issue. The seasonal adjustments to the inflation data could be a bit off, making inflation appear hotter in the first half than it will in the second half of the year. If this all seems confusing, you're not alone. Fed officials are also struggling to get a clear idea of what's happening. There will be plenty of updates on their thinking, though, with almost a dozen speaking events this week. That includes Chair Jerome Powell on Tuesday. Now, here's a bigger picture. Inflation probably is still slowing, even if the data look bumpy. Consumer savings piles from the COVID-19 pandemic are gone, making them even more price sensitive than they used to be. Retail sales figures and earnings this week from Walmart and Home Depot will add more color there. Pay particular attention to what executives say about the outlook. They've got their fingers on the pulse. And Fed officials may well indicate they would like to cut rates even if the data won't allow them to yet. That's a good sign for investors, even if the first reduction isn't imminent. And with that being said, let's take a look at what we can speculate to see in today's market fluctuation, because that's our job. We're speculators. So, in front of us, we have the NASDAQ daily chart on a candlestick chart. And as you could tell, we have actually plateaued after such a nice fluctuation from the beginning of the year. Right in April, we had that slump that we had obviously come and analyzed from the beginning of the year with the Fibonacci retracement tool, where it shows us that it did retrace to the golden ratio of 0.618%, and from here it rallied back up. But if you look at that rally, we are basically where we began fluctuating to the downside. So what can we read from here? We can come here and let's just draw a horizontal line and say that particularly right around this area, this area here, previously it was a volume node. So as history repeats itself, that area here will be that resistance again. So that's where I'm placing basically my resistance line, which is right around the 18,300 and change. And let's just clone this line. Let's clone this line and bring it down and use the 50-day moving average as our support line. Let's change the color on that puppy, and that's where we have our support. That's how I did it. That's how we can come in and draw our levels of resistance and support. So we're using the Bollinger Bands also as a dynamic resistance and dynamic support. The medium in this case could be also used as a support level. So initially, we still have some room to move to the upside. I don't believe it's going to be that much. So our resistance is going to be 18,495. Sorry about that. That little confusion at the beginning. So let's see. That will be for the Nasdaq. Let's take a look at the S&P 500. Will populate. Come on, populate. I need you to populate. There it goes. All right. So for the S&P 500, let's grab the same scenario. So this is going to be 5,300. Let's clone that puppy and actually bring that down towards the 50-day moving average. Let's change the color on this one. Let's make that one green. All right, so there we have our levels of support and resistance for the S&P. Let's populate now the Dow. Let's also draw a line right around this level, 40,000 change. Let's clone this puppy, bring that one down towards the level of the 50-day moving average. And there we have that. As far as crude oil goes, well, with crude oil, we are basically creating a floor for crude oil. So let's use $78. I'm gonna actually, let's just use the low of May 8th as our support. Let's clone this line, change the color on that one to green, and let's bring it up to $80. I think that's gonna be nice. Now, in regards to crude oil, the floor has been created somewhere around 78. We are in the green so far right now. So a stronger fluctuation to the upside can be favored towards the $80 level. So let's see if that will be the case for crude oil today. So let's just stay with the momentum to the upside. Nat Gas. All right, so Nat Gas has been one of the ones that are doing more of a fluctuation to the upside, but I'm just thinking that it is running out of steam, even though it's showing more and more green candles. But let's just use this tight range, $2.20, the 20 cents range actually, for Nat Gas. Let's see if it'll continue to move higher. Gold, however, is a different story. So gold, we have seen how it was in a particular level of congestion, just doing movement to the sideways movement, lateral movement, and it has broken out of that. So let's just use 2285 and change as our support, and our resistance is going to be 2400. It has done a little bit of a retracement into the session today. So let's see if that is just a correction, a pullback, healthy pullback, and then it will continue to move to the upside. Now let's just do silver, and silver also looking to do the same. $29 is going to be our target for the week. Let's see if we'll be able to reach that target, and then we're going to be using this particular level of sideways movement from last week. We'll do the same scenario, 2 days of flattish, just consolidation, ranging, and then break out to the upside. That's basically what it's doing today. So we'll do it today, or would that be tomorrow? Just be careful of that. But yeah, I'm still favoring move to the upside. Let's look at copper. Copper is doing higher highs, higher lows. So it is in an uptrend. So let's just use the 480 as our particular perhaps support level for copper, and let's just change this to green. So move to the upside, being favored buys. We are almost entering overbought territory, so keep that in mind, but still 480 can be accomplished. We have Bitcoin. I'm going to use a 50-day moving average as the support, at the resistance level. It's closing this one, and support is going to be 60. So That's the levels for support for Bitcoin. I'm just looking that perhaps it could do a nice little move to the upside throughout the week. Currencies are looking to stay stable, looking to stay above 108 for the euro. Let's clone this, bring this down, and let's just use 107.5-ish as our support. So there we have it, moving to the upside, favoring long positions. Then we have 126 as our resistance for the pound, and let's just use the medium of the Bollinger Bands as our support level, favoring long positions. The US dollar index is looking to just do a nice pullback from that moment that we have seen last week, which is making nice fluctuation to the upside, but it has now from this 105, it just has been doing nothing but just pulling back. So let's see how much lower will it do today. With any other movement stronger to the downside, we'll see a continuation to the upside on the currencies and the metals. If we do happen to see the US dollar index recuperate itself and just turn itself and do a fluctuation to the upside towards the 105,500, we'll see a retracement on the currencies most likely. That is it for me today. Have a great trading day, and I'll see you tomorrow.